I mean, nobody likes to think of it this, right? That I could die one day and
We
maybe
don't like
not.
to talk about that. Yeah.
Exactly. While it might not be a happy thought, it's the reality, right?
Yeah, that's
the harsh
a-
reality.
That's a reality. Yeah.
Considering that's where you realize that importance that hey, if something could happen, I do need to take care of others.
You're saying that you'll end up paying a super high premium.
Absolutely correct. Because your
Okay.
lifespan could be shorter. Personally, if I were in their position, I would rethink my smoking habits, right? Like, hey, do I really need to pay this much? So you could keep it plain and simple, margarita,
Okay.
but you could also go for a little pineapple on your pizza.
Don't think anyone wants a pineapple on the pizza, Sushant. So Sushant, it's ingrained in our minds as Indians to work for our family and leave something behind for our kids. Now, for those who don't come from generational wealth, right, it's very natural for them to consider getting a term insurance or a life insurance.
Right.
So much so that they want a safety net or a protective shield to fall back to. Now, term insurance is mostly misunderstood here in India. Now, they feel it's a very complex subject to delve into. But today, we want to speak about term insurance, the nitty-gritties of it,
Sure.
and how do we break this down. So
Okay.
we're here for exactly that. Now, let's start with the basics, right? So what is term insurance?
Right. I think this is a new term that a lot of people haven't really heard, right? Because
Yeah.
growing up, all of us have heard of life insurance. We never heard of a term insurance per se.
Exactly.
And I think even life insurance, we can attribute it to LIC.
Exactly.
Right? Seeing their agents, seeing their ads on
Exactly.
posters, newspapers, everywhere.
True.
So I think, that was something even I personally didn't know before I, joined this
Is it?
job and got a bit more educated on it.
Okay.
So yeah, term insurance, I would say, is a type of life insurance. At the end of the day, they are one and the same. But the key difference here being this is a pure insurance instrument.
Okay.
Whereas other forms of life insurance do come with some form of money back or investment attached to it.
Okay.
Wherein it's not just an insurance product that you're getting security or protection from.
Okay.
It's also an investment where you're getting some form of money back.
Okay.
Either in between the tenure or towards the end of the tenure, they have different schemes.
Okay.
But insurance as a product in general, right? Or as the term insurance goes,
Right.
it's a concept where you pay a small amount of money in exchange for a large amount of protection.
All right.
It's an expense you incur.
Exactly.
You never really invest in an insurance plan.
Okay. Now, that was a mouthful of jargons. Now, if I were to ask you, could you break this down like I'm a 10-year-old?
Okay.
The concept of insurance.
Right?
Yeah.
Think of it like a basket, right? Where all of you are putting in 10 rupees, a small amount of money. And in case something unfortunate were to happen to one person in your group, of everyone who contributed, the entire basket would go to that person to take care of his well-being.
Exactly.
That's, I think, as simply as I can put it.
Well put. Well, now, why should someone consider getting a term insurance in the first place?
I think here, at least a lot of youngsters, because at least for us early in our career, we're still to an extent dependent on our parents, or we've just started earning, so we're trying to live a good life and splurge on a few things, right?
Correct.
We don't really consider the importance of, look, we might have financial dependence one day.
Okay.
A spouse or a kid who are financially relying on us for their livelihood and well-being, right? Their bread and butter would come from our earnings.
Correct.
And also the uncertain fact of, I mean, nobody likes to think of it this, right? That I could die one day.
Yeah.
And
we
maybe
don't
not.
Like to talk about that. Yeah.
Exactly. And maybe not at the end of my lifespan. The average mortality rate, I might not live until then either.
Exactly.
So you have to consider that uncertainty. While it might not be a happy thought, it's the reality, right?
Yeah, that's
a harsh reality.
That's a reality.
Considering that's where you kind of realize that importance that, hey, if something could happen, I do need to take care of others.
Right.
There are others who are relying on me as well.
Makes sense. Now, how does insurance really work? You mentioned an analogy where you put 10 rupees in a basket, right? So those are what we assume are called premiums, right? So
absolutely correct.
So how does this work? How do these premiums work?
Right, so your premium is calculated based on multiple factors, based on, let's say, how much protection you're looking for. That way, there's different baskets created.
Okay.
There's a basket created for, people who want a small amount of protection versus a large amount.
Okay.
And thereby, your contribution would be larger as well.
Okay. Now, what are these factors that, shape these premiums? And is it the same for everyone?
No, it's completely different. I think there are multiple moving parts here, so I'll try to cover them as simply as possible. One would be your current age when you're buying it, meaning the younger you are, the lower risks you have as a person, right? Your health is less prone to conditions, and you're in a better condition or in the peak of your health, if you want to say it that way. Two, it also depends on, let's say, things like your occupation. If you're a person who works a desk job, you're not really prone to too many risks.
Okay.
But if you're a person who works let's say you could have occupational hazards as well, right? You could
suppose a minor.
Absolutely correct. Yeah, someone like that, who is prone to a lot more risks at his work, right? So for him, ideally, the premium of the basket would attract a slightly larger amount, essentially. I think that's probably two of the biggest factors as of now.
Okay.
Now, since we're talking about life insurance or term insurance per se, the term for which you're buying it as well probably has the most weightage.
Okay.
Which means, let's say in India right now, what most insurance companies would do, they would calculate that, look, what is the average lifespan of a normal individual, right?
And how do they do that?
I think that's just based on statistics, right? We have our census that comes out in 2001, 2011, 2021 and so on.
And what's that age range?
It changes for male and female, it changes, but I think as of now, we can consider a comfortable average of 70. I think that's the average lifespan as of now.
And does that also motivate these insurance companies when handing out these policies to say these folks, if you're a male, so this is the premium, and if you're a female, then this is a premium?
Definitely, yeah. They do the clear bifurcation that look, if you're a female, the chance that you live a bit longer is higher. So you ideally can pay lesser there. The risk of something happening is lower.
Exactly.
That's how they calculate it.
Now, I've been hit by a lot of these ads by these companies, right? Of these insurance companies. Now, they say that one standing out feature is if you're a smoker, then this is a premium. Then if you're a non-smoker, this is a premium.
True.
So that's a very bizarre thing to consider,
Right.
Now, how does that affect?
Once again, it just links to life expectancy. I think it's pretty straightforward there, where tobacco users are scientifically, medically known to have a shorter lifespan.
Okay.
The risks you're exposing yourself to by consuming harmful products like nicotine and tobacco.
All right.
I think thereby it has a direct and clear link to
makes sense.
You having a shorter
if you're
lifespan.
A smoker, you're saying that you'll end up paying a super high premium.
Absolutely correct, because your lifespan could be shorter. Like I said, scientifically and medically proven.
So could you give an example of what that amount might look like?
Oh, quite significant. I think, to be honest, personally, if I were in their position, I would rethink my smoking habits, right? Like, do I really need to pay this much? But to give you an exact number, some companies even do it at a flat 100% rate.
Is it?
Exactly. So if one person was paying 10 rupees, like I said, the other guy has to pay 20 rupees just because he consumes cigarettes.
Wow.
But here it's not just 10, 20. We're talking about 10,000, 20,000.
Exactly.
Right? It's a huge amount.
That's startling. Yeah.
That's, I think, the highest. The average, of course, in the industry is about 50-60%. So that's still quite a premium, right? If you over and above.
That just not burns a hole in your lung, but also in your pockets.
Absolutely.
Now, is there a checklist of sorts that someone should consider when getting a term insurance?
Right. So I think here again, right, one depends on your own profile and what you're going for. So we can either look at it in terms of what kind of plan you're taking, where you start with firstly for how long you want to buy the insurance.
Okay.
Now, if you're a young person who's 20, 25 and you're uncertain of how long you want to buy it for, because you don't have dependents right now, right? You've just freshly graduated, you haven't got married yet, no kids. So just take assumptions here that, maybe by 30 I get married, by 35 I expand my family with kids. By the time I'm 60, 65 in the future, my kids will be 25, 30 years old. Technically, they should be self-independent by then.
Makes sense.
Secondly, I would be retired by then. As of today, that's the retirement age.
Correct.
Although I know most of us are trying to retire early, but let's just keep that assumption for now.
Right.
So that's one thing you can do. Make sure you choose the duration correctly. For cover amount, obviously, there's ways you can calculate it, customize your options.
Is there a calculator that...
Absolutely. There are some methods that you could approach and different methods out there on how to figure out how much insurance you need.
Correct.
And we could probably dwell into that further.
Okay.
Then you look at add-ons and riders.
Okay.
So when you're buying a plan, you could choose a few more options by paying a bit more, but these could enhance your protection a lot more.
Okay.
And at the end of the day, I'm buying this for peace of mind.
Correct.
Right? So if I feel that, hey, I don't want to cover just my death, I would also like to cover the scenario of in case a critical illness happens tomorrow.
Okay.
I could lose my job. Now I'm still alive, but I could lose my job, and that could drastically hit the financial condition of my household.
Understood.
Some monetary support would be great.
Correct. So what you're basically saying is the base insurance plan, the base term plan that you have is like a pizza base, and whatever riders you have are like toppings.
Absolutely.
Okay.
So you could keep it plain and simple, margarita, but you could also go for a little pineapple on your pizza.
I don't think anyone wants a pineapple on the pizza, Sushant. We'll come to the riders bit a little later. Now, I am sure you get this asked a lot. What is an ideal term coverage? Is it 1? Is it 2, 2.5, 5, 10? How, what's the range?
I think here, one of the biggest things people need to understand is that it's not a one-size-fits-all solution.
Okay.
You have to consider things here that, look, there could be two people working the same profile, right?
Okay.
They could be working in the same job, making the same salary.
Okay.
But their financial responsibilities could be very different.
Okay.
One person, his spouse is also working, so it's a dual income household.
Correct.
He lives in his ancestral home, so he doesn't have any rent, he doesn't have EMIs.
Right.
He just has one kid.
Uh-huh.
So that household expense is the bare minimum, right? It's just on themselves, on food,
Correct.
Electricity, utilities, what we call it.
Okay.
Whereas the other person is the sole breadwinner of his house. His parents are dependent on him. He has two kids. Like I mentioned, he's a sole breadwinner, so his wife also isn't working. His financial responsibilities are huge.
Yeah.
So these two people, although their income is the same, they really shouldn't be buying the same cover amount. So what Ditto does is we have an expense-based approach where we consider your expenses that the dependents need.
Okay.
Should something happen, how much do you think they need on a monthly basis as of today?
Okay.
As of today is important because I will take care of inflation.
Understood.
We're talking about the next 30 years, so I'll take care of the rising cost of living.
Okay.
And then we also look at some returns that, okay, if something happens, the family is not just sitting on 1 crore and spending from it.
Understood.
They're able to generate some amount of returns, maybe by putting it into a fixed deposit in the bank.
Understood.
Gaining 5-6% every year. So that way they're sustaining for a slightly long tenure and covering themselves for that long.
Makes sense. That makes sense. Now, digressing a little here, right? So there are a lot of myths around getting term insurance. So in your experience as an advisor, what are some myths that you've always wanted to bust?
Right. Okay, this is an interesting one. Okay. I think the common one we get is that life insurance should be bought until a very high age. I think most companies give you 85 as the maximum, meaning you can buy it till your age of 85 in the future.
Okay.
Now people do this with the intention that, look, something will happen by then and my family will get the money.
Okay.
And they're essentially trying to monetize this policy.
Okay.
But you're missing the essence of insurance there. That look, it's an expense, not an investment.
Exactly.
Don't try to get something out of it. Just keep it for as long as you actually need it, and that's about it.
Right.
And people fail to consider that, look, the insurance company is also trying to run a successful business.
Right.
Meaning, if you're buying a life insurance beyond the life expectancy, they know the probability of actually handing out that 1 crore is really high.
Exactly.
They'll have to give baskets to everyone, right?
Exactly.
Not just one person.
True. True.
Thereby, they won't make you fill the basket yourself and give it back to you. Essentially, that's how it works.
Exactly.
So that's a common myth we've seen.
Okay. That's great. Now, coming back to riders, right? So, how important are these riders, and what's the percentage of people who buy insurance would go in for riders as well?
Fair. I think, look, the perfect analogy you use, right? Toppings.
Yeah.
You've always seen there's quite a few of them.
Right.
Now, we don't always choose all of them. And some of them seem unnecessary, like pineapple. Sure, that can be debated.
Okay. Are there any which comes at the top of your head?
Sure. I think one which I would say is a bit unnecessary is an accidental rider, for example.
Okay.
I won't say unnecessary, but it's not something that everyone should consider.
Okay.
So how it works is accidental deaths are already covered in a life or a term insurance, amongst other types of deaths.
Okay.
Now, an accidental death rider basically says that, look, in case something happens, we'll pay out the term insurance, but we'll also pay out an amount over and above that, just for an accidental death.
Okay.
Let's say if it were an illness-related death or a natural death, we won't give you that additional amount. You'll still get your term plan.
Understood.
Now, my question here is that, are you someone whose lifestyle or habits are really making you prone to an accident? Are you an adventure junkie who likes traveling a lot?
Okay.
Is your job more prone to an accident? Now, believe it or not, if you are, the insurer won't even give you this rider, right? They'll do double checks in place. So you're just trying to predict a scenario where, okay, this might happen, so my family needs more money.
Okay.
So this is one that I do say people do get a bit confused by. I think when they see this rider, their first question is, are accidents not covered? Why am I paying separately for this?
Right.
So this is one that I would say can be debated.
Correct. Now, there are a lot of insurance companies out there. So what are some metrics that one should consider when getting a term insurance?
I think, look, the first thing to consider here is you're buying term insurance for a span of almost 30-40 years.
Right.
The first question you'd have is, will this company stick around for that long? Should something happen 29 years later, will they still be there?
Exactly.
Right? And will my family have to go from pillar to post to look for who to claim from and so on? So that's one of the first things Ditto did.
Okay.
We shortlisted out of, I think there's 35-40 brands out there in the market.
Okay.
We shortlisted firstly based on performance metrics like claim settlement ratio, amount settlement ratio, their claim volumes, their annual business, their market share.
Okay.
We also looked at their complaint volumes and kind of arrived at the top few performers. And like I mentioned, we also looked at the claim volumes in annual business to see the standings. Out of 40, there might be some who are doing really well, but they're incredibly small companies.
Okay.
Right? While the performance is good, we don't see them sticking around for more than maybe 5-10 years.
Understood.
So that way we went with the biggest and the best performing players.
Okay.
That's, I think, the best and safest approach to go about this.
So Sushant, there are tons of insurance companies out there, right? So how does one assess which insurance company is best? Like any metrics that one should follow?
Yeah. So I think here I can probably list out the top 3 metrics, and I think maybe that should be helpful.
Okay.
So the first one to look at is claim settlement ratio, which is essentially for every 100 claims received by the insurance company, how many claims were settled out of that.
Okay.
So I think most of us have seen numbers of about 98%, 99% and so on. The average in the industry, or a good average to have, is anything above 96 is good to go.
Okay.
So 98, 99 is a comfortable number, and that's the most common metric we've seen.
All right.
Next follows the amount settlement ratio, which is not in terms of number of policies, but the settlement in terms of amount.
Okay.
Meaning if a company received 100 crores worth of claims, how many crores were settled out of that?
Okay.
So there we've seen anything above 90 is a very safe and comfortable number. You never achieve a number like 99 here. You'll have about 90 to 95 is the average we've come across.
All right.
And lastly would be the annual business or the volume.
Okay.
In terms of market share as well, that compared to the 30-40 brands out there,
okay,
these are the top 3 or top 5 players.
Okay.
So here it's listed out in crores in terms of how much business they're doing and the number of policies they've sold.
Okay. Now we have a very exciting rapid fire round. Sure. Let me just start. Critical illness rider, necessary or optional?
Definitely necessary. I think the kind of monetary support it could provide in the future, in case there's a critical illness, your job could be affected and some money coming in the household could be really helpful.
Understood. Now, buying online or via an agent?
Buying online. I think buying offline or via an agent is about 5 to 10% more expensive. And online platforms generally give you additional support in terms of operational support as well as claim support as well.
Okay. Monthly premium or annual premium?
Annual is always better because it's cheaper. But in case you are going through financial crunch, you could pay monthly and you can always switch this up in the future. At your policy anniversary every year, you can convert it back to annually once things are a bit better.
Okay. Last one. Return of premium term insurance. Worth it or not?
Definitely not. The additional amount you pay just to get back your premiums, it's absolutely not worth it. Yeah.
Okay. Now, Sushant, any parting words?
I think if you're someone who hasn't thought about a life insurance before this, so you weren't aware of what it even was, hopefully you're more educated after this conversation and maybe it's something you do consider now and probably give it a thought.
Thanks for that, Sushant. Thanks for tuning in, folks. But before we go, a little something about Ditto. We are an insurance advisory platform and we help you not just buy, but even compare and even help you in the claim settlement of insurance. Now we have a stellar rating of 4.9 over 5 and we're backed by Zerodha. We have a strict no spam policy and we only give you high quality advice. If you're someone who's looking out to buy an insurance, then book a free of cost call with a link in the description. Until then, like, share and subscribe and happy insurance hunting.